Hey everyone, my name's Andy. My channel is Finding Value. I'm going to step through a presentation here. It's about Discovery Metals. They are a junior explorer. They are not producing. This is high risk. It is very speculative. But it is a company that could potentially have a lot of ounces in the ground. And I'm going to step through this presentation with you guys. So it's Discovery Metals. It was updated in November 2020. Some forward-looking statements. And I'm not telling you guys to buy this. It's just a junior explorer to get you some more names in front of you. So they've got excellent grades over a broad widths and high grade vein potential. It's the fourth largest undeveloped silver resource globally. Silver price torque, significant resource expansion at higher silver prices. So this is a play on silver prices. When silver prices go much higher, which I think they will over time, I think these guys are gonna profit quite well, whether they develop the resource to mine or if someone else does. They have a project. It's called Cordero Project. It's a plus 1 billion ounce silver equivalent global resource. They've got a strong cash position, 80 million cash balance. We can go down here. Eric Sprott owns 27% of Discovery, one of his largest investments in the silver space. This is where Eric Sprott's putting his money. I'm also invested in this company as well. Cordero overview, 100% owned, large land package, excellent local infrastructure, topography, ideal for open pit mining, located in mining-friendly Chihuahua State, multiple property-wide targets. You can see it on the right-hand side here. This is the starting point. So they've got 1 billion ounces of silver equivalent at 32 grams per ton. The global resource with inferred is 1.5 billion ounces of silver at 40 grams per ton equivalent. So that's a huge resource. The game plan here, phase 1 drilling, define and delineate high-grade zones, upgrade majority of resource to M&I. They're also doing more drilling. This is all the way into the second half of 2021. They're PEA in the second half of 21, focus on high grade early in mine life, stage expansions, manageable development capex, optimized flow sheet. Phase 1 drilling, they did 105 holes, 55,000 meter drill program, 4 rigs currently turning. Target 1, bulk tonnage mineralization, higher grades over broad widths confirmed. Focus on filling large gaps in previous drilling. That's kind of what they're focusing on. High grade feeder structures. There's also high grade vein potentially previously overlooked. Plus 1,000 grams per ton silver equivalent intercepts on initial drill holes. So they've got some drill holes here, typical drill intercepts. Remember, this is lower grades. It's a higher cost. It's a higher cost project. Now I should say project. It's higher cost mining operation when they go into mining. So it needs higher silver prices for this to really work. But as silver goes higher and higher and higher, their reserves grow, if that makes sense. Because if you're at lower grades and the price goes up and up and up, you're going to be able to extract lower and lower grams per ton. So this, when you have a company that's got a ton of silver in the ground, even if it's lower ore grades, it might be okay as the silver price goes higher and higher and higher. I've done a lot of clips on, how much demand is out there. We are going to be running into very large deficits, probably 200 million ounces by 2030 of silver. So I have a feeling that a lot of these places are going to have to come online to meet future demand for all the electric vehicles that we want to build and all of the other demand for silver in technology. So it goes over some high-grade veins. They're looking at a disciplined approach, increased cutoff grade, target LOM head grade plus 100 grams per ton silver equivalent. High capex, development capex of 570 million potentially. Go down. Here's a timeline here. Phase 1 drilling, Q2 of 2021, metallurgical testing, property-wide drilling, Q4 of 2021 potentially, maybe a little bit past that. New resource estimate and revamped PEA. Capital structure here, retail's 34%, founders management 11%, institutions 28%, and Eric Sprott, who's a billionaire, 27%. Cordero silver price torque. Optionality and scalability. So if you lower your grades to 15 grams per ton, increases the resource by 860 million ounces. And you can see this, here's your grades cutoff. This is your silver equivalent in million ounces. 50 grams per ton, you're at roughly, this is also inferred in here. It's about 600 million ounces, all the way down to 15 grams per ton, which is 1.5 billion ounces. So they have a ton of ounces in the ground. This is a higher cost producer. It's an open pit mining, so it's going to need higher prices. I am a silver bull. I think prices are going to go much higher than where they are today. You look out in front of us, we've got those large deficits way out there. I don't care if they produce this 5 years from now or 10 years from now. I'm very patient. I think silver prices are going to go far higher. And I think this company's got the silver in the ground to make it a very large, worthwhile investment and mining company to extract a very large amount of silver. So that's why I like Discovery Metals. You guys do your own research. This is highly risky. It is a explorer company. They are still exploring. They are still proving up the reserves, but they already have proved a lot of the reserves already. So, proceed at your own risk. I do own some shares in it for self-disclosure, and I just wanted to get this name in front of you because a lot of people are asking, what is Discovery Metals about? So, thanks for listening. If you like this content, please subscribe, click the thumbs up button, and leave some comments. This is Finding Value.